Whole life insurance is one of the most misunderstood financial products on the face of the earth. In this video, I'm going to talk about cash value life insurance, infinite banking, cash flow banking, cash flow hacking, whatever you want to call it. Everybody calls it different things, but we're talking about whole life insurance and the problems that it can solve for you in your life. I got 10 reasons in this video that I'm in love with this product, that I think it'll help you solve your problems. It'll help you get where you want to go faster. I'm on the road. You can see I'm in a hotel here. But I just kind of went through and I got inspired to do this. And so if you are somebody who's interested in infinite banking, you're a life insurance agent, you're looking to buy a policy for yourself, whatever, subscribe and hit the bell to this channel, because there's nobody in the world that's putting out more content dedicated to educating you, not just marketing to you, but educating you on how life insurance can be utilized in your life and how you can potentially communicate to your clients the importance of it. So let's get into it. Hey, what's going on, cash flow hackers? Today we're going to be talking about the 10 reasons that I think every single person in the world should have an index universal life policy, a banking policy, whatever you want to call it, cash flow hacking policy, call it all these different things at the end of the day. But really what it boils down to, it's a properly designed cash value, high cash value, whole life insurance policy designed for cash efficiency, and realizing that when you have an efficiently designed cash value policy, it gets every dollar in your life to perform multiple functions. It solves a lot of different problems. And in this video, I'm going to go over the 10 reasons that I think you should have it, and it's going to cover the problems that it solves. So let's go. So reason number one, I think everybody should have infinite banking, is because of the fact that you have the potential for higher returns. What do I mean by that? Because I always say life insurance is not an investment, it's a savings alternative, right? And the difference between a savings alternative and an investment is just a function of risk. In a whole life policy, you cannot lose money as long as you are contributing to it. If you structure it properly, you got more flexibility than you realize. And so I've got all that in another video. But what we talk about for higher potential returns is compared to other assets that have similar liquidity profiles, right? And so we're talking about being able to get kind of on the high end of bond-like returns, call it the 4 to 5% long-term internal rates of return. And what we're also looking at is when you compare that now, compared to savings vehicles, that's phenomenal, right? When you look at the liquidity aspects of this. Now, compared to investments, that seems really bad. Now, I want to kind of talk about really quickly a conversation I had with a client the other day. He was saying he lost 18% last year. And that was really, kind of turning him the wrong way. And his advisor told him, hey, don't worry about it. Like, you maybe felt like you lost 18% this year, but over the past 10 years, 8 years, actually it was 8 years in this scenario, he said you made over 6%. And when you break it down, that may sound like, okay, that's okay, I didn't lose 18%, but we just came through the greatest bull run of all time, and this account for this pretty well-to-do person only had 6% with his money manager. Now, if you just had your money in the index, it would perform better than that, and that's a whole different story. The purpose to this is when you think about 6% and then you look at the tax consequences of that 6%, if you could get 4.5% long-term in a whole life policy and you look at the tax advantages that go along with it, you're going to compete with these investments that are getting better returns. You can't look at it apples and apples when they have completely different risk profiles, completely different tax profiles, and you have to look at how is it solving the different problems in your life. Getting potential higher returns is absolutely there. And that is reason number one that I love properly designed whole life insurance. So reason number two that I love whole life insurance when designed the way we're talking about, the way that most infinite banking people talk about, is the fact that you have access to your cash value for your life to solve different problems in your life. Access to the cash value could be utilized for multiple things. It could be utilized for emergency, it could be utilized for opportunity, it can be utilized for major capital purchases, major expenses, for your house, for your business, for whatever. But the bottom line is having access to this capital while it's accumulating, be able to borrow against that money, never interrupt the cash that's growing in your policy. I think that's important to understand, is the words we use matter. A lot of agents say you're going to borrow from your policy. You're never borrowing from your policy. That's what confuses people. They say, well, how am I earning money and paying interest? Why would I pay interest to an insurance company? The reason is because you're never borrowing from your policy. You're never borrowing your own money. You're leveraging a system. That's why I'm not a pure infinite banker. That's why I believe sometimes utilizing a third-party bank and collateralizing your policy to help make things with the bank more efficient makes a lot of sense. If the money is cheaper with the bank, and you can deal with maybe the less flexibility that the bank will give you compared to an insurance policy, a policy loan directly with the insurance company, then it makes sense, right? But the bottom line is, the reason number two here is that you have liquidity of this money for emergency, for opportunity, for major capital purchases, for investments in real estate and other opportunities that you can create better returns and take risk in things that you understand. It is a system because of the fact that you have access to this money. It helps you create a system that you filter all of your financial decisions through. And when you do that, you can grow. You become who you need to be as a person with your money to get to where you want to go and accomplish your goals. And that actually leads me into number three, which is it forces you to become who you want to be to get to where you want to go. Most people, unfortunately, just kind of offset their financial education. They put their success with their money in the hands of money managers, financial advisors, people of that nature, and they don't take radical self-accountability for the results in their financial life. I talk about this all the time. The bottom line is we have to take responsibility for our money. If we don't understand it, if we don't understand where we want to go, what we want our life to look like, what kind of life we're trying to create, and we don't understand how to utilize money as a tool to get there, then it's very easy to just say, well, I'm going to go try to chase this rate of return. I'm going to invest in a 401k, invest in an IRA, give my money to a money manager and just invest it and let it hold and chase this goal of retirement at 65 years old. And for people who want to do that, listen, there's nothing wrong with it. It's better than doing nothing. And you know, that is what it is. But if you're like me and you're like a lot of people and the people that we work with, you want something more than that. You're looking for financial freedom faster than 65 years old. You want control of your money to actually go out and chase the results in your life, right? That comes back to the last thing I was talking about, point number two, talking about control. This is the point of having access to this money forces you, puts you in a position where you have to commit to growth. This isn't the easiest system. I think this is one of the hardest parts for people to realize. Utilizing whole life insurance in your life is not the easiest thing to do. So I'm not going to sit here and blow smoke at you and tell you it is. It is going to be one of the more challenging financial strategies that you will ever follow. However, if you follow it, it's going to push you to be more so you can become who you want to be. And to me, life is the journey. Life is about growth. Life is about embodying that spirit of saying, hey, I came into this world. Here's where I'm going. Here's where I am. Here's where I'm going. Here's what I want to leave for a legacy. And utilizing my money as a tool to accomplish and get the results in my life for all the different ways that I want to go for, right? And that I want to chase after. I embody that journey and I encourage you to do the same. Reason number four is kind of an extension of that one as well, is it protects your money in market fluctuations. Now, how does that connect? Well, as you are growing, there's going to be a lot more opportunity when the market is volatile, when the market is fluctuant. And so what happens is as the market goes through these cycles, like what we're going into now, there's a lot of uncertainty. I think a lot of people are coming into this time frame where they're like, whoa, I'm seeing the banks fail. I'm seeing all these things happen. SVB is happening. Credit Suisse is having challenges. Like all these things are going on, right? And so how do you prepare for things? And the market is like massively volatile, right? How do you prepare for those things? Well, the answer is if you become who you need to be and you understand this and you have your money positioned to take advantage of it, that's how you prepare. Like you set your money up ahead of time. You can't, it's kind of like digging a well. You can't dig a well once you need the water. You got to do it ahead of time. And it's the same thing here. You got to put your money and set yourself up ahead of time. And the good news is it doesn't take that long. You're talking 30 to 60 days to get a policy set up and have a high percentage of liquidity going right away. And so this is why I always kind of tell people the best time to plant a tree, the best time to dig a well is before you need it. Tree 30 years ago, next best time is now. Get started if you feel like you haven't done it. Get going on it. And if you haven't already, make sure you go down below in the link in the description below, set up a clarity call with our team, see what it might look like for you and go from there. But being able to have that clarity and being able to have that safety in times of volatility to avoid market fluctuations is wildly powerful. So that's number four. So number five is the tax-free benefits of whole life insurance. Now I talk about this a lot. I talked about it a little bit already. Your money is going to grow tax-free. You're going to have tax-free access to it through policy loans, and you're going to have a tax-free death benefit as a way to transition your wealth to the next generation in the way that you want to in a tax-free basis. And so there's not another financial tool in the world that will be able to do for you what life insurance can do for you in that capacity specifically. So one of the reasons I always tell people, Life insurance is not a need product, it's a want product. The wealthiest people in the world own the most life insurance in the world because they understand the power of transitioning their estate to the next generation on a tax favorable basis. Now, people like Jeff Bezos and Warren Buffett and all these people, like even no-name people that you don't know that have all this money that are transitioning it, they're probably in a position where they have the least need to do so, right? They just understand, I don't want to give the government my money. I want to keep my money in my family. Now, people who are, let's call it middle class or a little less successful when it comes to their money, you have a bigger need to pass money on to the next generation on a tax favorable basis. If you want to help your family get to the next level, to get out of this paradigm that they're living in. Imagine if you could set up a plan that made sure what you wanted to happen would happen when you wanted to happen, whether you're here to see it or not. Utilizing your whole life insurance policy as an emergency fund, as a safe place for your capital, will include all of these different things. It'll pass your money on a tax-free basis. Your next generation, your heirs, will get that money tax-free. It'll help them start way ahead from where you started your journey. So number 6 is you can utilize cash value whole life insurance to fund your retirement, to fund college, and to fund other assets and other investment strategies that you want, right? So here's the deal. I'm not a big believer that life insurance should ever be viewed as an investment. And so therefore, from that perspective, I look at it like, do we ever want to lean on revenue coming from our whole life insurance policy in retirement? The answer is no. I don't think anybody's going to get the returns that you need to put money into a whole life policy and to just commit to just having that be your only source and then have enough income being pulled out of that during retirement to accomplish your goals. That's not the intended purpose of it. The intended purpose of it is to be that safe portion of your portfolio, right? Like that's why I'm a big believer in cash flow hacking. I believe in cash flow investing. I believe leveraging while you're accumulating money, while you're building your wealth and building your career, utilizing that money and leveraging it for the access to it while you're accumulating to buy cash flow real estate and build your wealth there, build your cash flow there. And then as you get that cash flow, recapitalize the policy. And then when you hit retirement and you want to be financially free and you want to stop funding it, now you have a pile of money there that's there for your safety. So if you've invested in the market, if you have real estate, if the market, when you hit retirement, which by the way, you're going to be in retirement for 30 years or so, right? If it goes down, if the market goes through what we're going through now, and it's down 18%, 20%, 30%, you don't have to rely on selling properties in depressed environments just to create cash for yourself to survive. You don't have to rely on taking income from your Roth IRA and your 401k and your IRA and liquidating negatively performing assets just to survive, because that compounds a problem, and that's why people's financial plans implode in retirement. Life insurance is a safe portion of your asset. You can utilize it in different ways while you're accumulating, but once you hit retirement, it's an amazing way to utilize it as what we call a volatility buffer in retirement to help insulate and galvanize the rest of your assets. That's why I always say it's the BASF of investing. We don't make your investments that you make, we make the investments you make better. And instead of BASF, we don't make the products you buy, we make the products you buy better. That's what whole life insurance can do for you. And I'm telling you right now, if you don't have this in this perspective, like you're gonna hit retirement and you're going to have 25 to 30 years in retirement, most likely if you make it there, you're gonna see 2 to 3 big market shifts, right? Like market cycles where there's boom bust cycles. And if you're not ready for those, and if you don't have your money positioned in a way, and you don't have more new money coming in, which if you're retired, you're not going to, you're gonna feel it in a way that you're just not comfortable with. And I'm a big believer, I say this all the time, and I say it kind of in jest, kind of tongue in cheek, but I mean it, is that by doing this, by setting yourself up like this properly, you position yourself to live longer, because stress kills people. And if you can do this in retirement, you're gonna have less stress, you're gonna have more confidence in your money, you're gonna be able to live life in a completely different way from an energetic perspective. It's gonna help you live longer. Number 7, and I said this a little bit, but an infinite banking policy can help you make major capital purchases. Now, here's the deal. Cars. There's a lot of people talking about how to buy cars utilizing infinite banking and making money on the cars that we buy. Not a big believer in that. Now, what I will say is I am a big believer that if you're gonna buy a car, and you're gonna buy it anyway, then do it in the most efficient way, right? Now, I'm not gonna say go out and buy an Audi, like a Q5 or something like that for 80 grand, or a Q7 or whatever the best Audi is. I don't know, I should have used a car that I know something about. But if you're gonna go buy this $80,000 car and you're gonna buy it anyway, well then do it the most efficient way. Having enough money in your policy to buy it is gonna help reduce the expense of buying that depreciating asset, and you're never going to interrupt your money. You're going to have a system that you can buy all these through, and at the end of the day, because you did it that way, you're going to have more money at retirement because you're going to be capitalizing your own system, right? What I won't say is that you're going to actually make a lot of money on that because you're buying a depreciating asset. So making money on it would make you assume that you're earning wild positive arbitrage on the life insurance side, and that the car is actually going up in value. And unless you're really good at buying cars that go up in value and it's appreciating in the market and the classic car section, world is doing well, that's one thing. Now, a year and a half ago when we were in the car boom, there was a lot of people talking about this and there was this bubble, and so a lot of people were making money. Now that's not the case. And so once again, there's a difference between circumstance and principle. There are circumstances you can earn positive arbitrage. There are circumstances you can make money on depreciating assets like this when inflation is high and things are out of control and supply chain issues exist and all this stuff. That's not a principle. That's a circumstantial situation. When we talk about whole life insurance and how to leverage it, we need to be talking about absolute principles. And that is why I do believe that utilizing whole life insurance to buy your cars and to buy your trucks and major capital purchases for any of your businesses is the best way to go. Only if you're going to buy it anyway. Don't go out and stretch yourself to buy a bigger car because you think you're going to make money on it and you think you can afford it because you have no expense for it. That's not the way it works. Number 8, the reason I love infinite banking is it's going to help you reach your financial goals faster. Unfortunately, I think, and I've said this, and I hate to beat a dead horse here, but unfortunately, we've been trained to go to school, get a job, invest in a 401k, work 40 years and hope we get where we want to go, but we can't plan that far in advance, and we don't believe we're going to be successful in that world. Buying and holding assets does not work. We need to invest for cash flow. If you're in resonance with that, if you believe and align with that mindset and that statement that cash flow investing is the key to success, is the key to you having control of the results in your life, you need to get a whole life policy set up so you can enhance your cash flow investing strategies. This is why I wrote my book, Cashflow Hacking. Link in the description below. Go to cashflowhackingbook.com, check it out, and it'll teach you everything that we want, that you need to know to understand it. Now, full transparency, that one talks just about real estate investing. If you're a real estate investor, go get it. I have a new book coming out, Cashflow Hacking 2.0, that's going to be talking about real estate and other assets, other businesses, how cash flow hacking can work for people who are even not interested in real estate. However, if you have any affinity to real estate, my original book goes much deeper into the real estate conversation. So it's not, should I wait to get the other book or whatever? It's both kind of work together. And so that's that. So the purpose here though, what I'm saying is when you invest for cash flow, you reach your financial goals faster. And that's one of the reasons that I love, number 8 reason that I love, it's probably actually number 1 reason, but I put it number 8, that I love infinite banking, is because it's going to help you have more control to reach your financial goals faster. So reason number 9 that I love infinite banking policies and whole life insurance is it's going to reduce your dependency on traditional financial institutions. Look at around us, the banks are failing, stocks, investments, even bonds, while they're going up. If you were invested in old bond funds, you took it on the chin. Traditional assets that people are relying on are proving to be kind of unreliable. I'm not a doomsdayer. I'm not a guy that's going to tell you all the banks are failing. I will say there's a lot of banks that are failing, that people are getting maybe overly worked up about this. And maybe I'm not worked up enough. I'm not sure yet. I haven't reached my full conclusion on how I feel about this as I do my research. But what I do know is we're seeing stresses in the financial system, and people are starting to realize things in a way that they maybe hadn't ever contemplated before. Traditional whole life insurance policies are you're working with companies that have been doing this for 180 years. Whole life insurance companies are masters at managing risk. They've gone through 3 different variations of the US dollar, all the way from 1840. And think about it, all these big mutual companies started in the mid 1800s, before the Civil War, before the Great Depression, before all of the uncertainty that's happened. We've had 3 versions of the US dollar, yet these companies have pivoted and managed their general funds through every stage of the game, right? So to me, that helps me get outside of traditional financial institutions, which I inherently don't trust, right? So if you do, good for you. Stick with what you trust, align your money with your values and beliefs. I don't trust them. So I want to have my money in alignment with my values and beliefs. It gives me peace of mind. I have my money with a company that I know has transitioned through all these things, and I believe they're going to be able to handle whatever risk is coming down the pipeline better than I am. And with that, I want to have my money where successful people have their money. The richest people, the elite people, banks, and corporations are the largest holders of whole life insurance in the world. So if I know that the natural financial system is going to be essentially backing up the banks and the corporations and the wealthiest people in the world, I want to do the same thing. And so that helps me get outside of the financial institution and into a way that I know I can actually have more faith in. And so that's reason number 9. And reason number 10, I'll end with this, and it's kind of an extension of what I was just saying. It gives me more peace of mind because I believe it. I have more alignment with my values and my beliefs and my money. And I look around and I don't have to be fearful about the economic volatility. I don't have to be worried about a crash. In fact, I can be eagerly in anticipation and awaiting that crash, right? Like that's a monumental energetic shift for most people that I think a lot of people don't embody. And so you can't embody that unless you're willing to do what other people are not willing to do in times where things seem good, right? When times seem good, it's the human condition to want to take advantage of opportunity and like take risk and do all these different things. Unfortunately, those are the times that we should be utilizing what's really good for us and how good things are going and extra cash flow. And we should take that cash flow not to double down and take more risk, but to use it to solidify our foundation, to build our bunker, to build our walls and insulate and galvanize our financial lives. That way, when time gets hard, we're sitting there prepared, and that gives you peace of mind, that opens up opportunity, and ultimately, at the end of the day, it helps you reach your goals faster, as I've been talking about. So those are the 10 reasons that I love whole life insurance, that I think everybody should have an infinite banking policy, and hopefully it makes sense to you. If you haven't already, make sure you subscribe, hit the bell, that way you're notified every time I launch a new video. If you haven't already, comment in the comment section below. I do my best to engage with every single comment. Go ahead, if you want to talk and have a clarity call with somebody on my team, there's a link down in the description. Go set up a clarity call. And that's it. Have a blessed, inspirational day. We'll talk soon.